The bulls versus the bears. Get in the game. www.tackletrading.com.
Last week I wrote a write-up about delta weighting your portfolio, and in that write-up I talked about making sure that your portfolio bias based on delta matches your market bias. Now in the market right now I am neutral. That's what I've been for a fairly decent time now, and as many of you know, I'm heavy short on the Russell 2000. Now given the fact that I took off a couple of the bullish trades last week, looking at my portfolio this week, I needed a couple bullish trades. I needed to offset my delta, which is a negative right now. I needed to find a couple bullish trades to make. Now, obviously, the market is down just a little bit today, but nothing too dramatic. So what I did is I found 5 stocks. Okay, I found 5 stocks that fit certain parameters. First of all, I looked at ADM. I was doing my assessment last night, waiting for the market action today. ADM is in a nice little bullish uptrend. It's been one of the consistent stocks over the course of the last little while here. What I like about ADM is the fact that it's in an uptrend. It has a little bit of increasing momentum in terms of resistance levels, from that level of resistance all the way up here. So it goes from $48.50 to $50. That's $1.50. Then it goes from 50 to 52.5. That's 2.5. So we have increasing momentum. We're currently setting at a support level on ADM. If you look at your Fibonacci retracement, you're right there between the 50 and 61% retracement. And what I like about this is, number one, it's got a really solid support level right there. It's been just holding support at $50.50. And so you could really kind of get into this trade with very little risk, because if it breaks 50-50, we're going to put a stop loss under $50 anyway. So very little risk. I don't love the price action today. I probably, if I made this trade, would wait till tomorrow. But overall, I like the trend, I like the pattern, and I really like the strength of this $50.50 support level. So that was the first one in ADM. The second one was a company that we all love, all pun intended, that being Southwest. Looking at Southwest right here, we have really big increasing momentum in terms of the vertical distance between resistance levels. Huge increase there. Now we had a little bad news last week on Southwest, and I want to talk specifically quickly here. Last week we saw a little bit of a retracement down into the 20-day moving average. Starts to go back up, and for some that was a good trigger. To me, it's a little too early, and the reason I think it's just a tiny bit too early, I could justify it, but the reason it's right there at the 21% retracement. I see those a lot of times in terms of high bases and whatnot. The retracements I like coming into the 38% level, and when we saw the news of Ebola come out last week, obviously people got a little scared of traveling on airlines, and so there's initial, oh my goodness, let's sell all airlines, and you saw Southwest come down all the way down into the 3160 range before it started coming back up. So you have a retracement to between 38 and 50%. It's starting to confirm going back up. And once again, although I don't love the market movement today, I don't mind the overall trend. Well, I love the overall trend. I like the support level it's coming into right now. And so that is certainly one I'm looking at here. Another one was a company by the name of CYH, Community Health Systems. Looking at, let's take once again a look at the overall trend here. The overall trend is a bullish uptrend right there, and no, that is not a double top. We have a 2-day confirmation from 53 going back up, and I'm considering that one as well, although I do not like that one as much as I like the ADM support level, support level and overall Southwest trend. Another one I found was a company called Edwards Life Sciences. What I liked about this position coming into tomorrow was I love the trend, real healthy, strong uptrend. But one of the things I really liked about this stock, looking at it yesterday, is the fact that we had this big breakout. This is a bullish uptrend. This pattern is a high base breakout. Then it breaks out up top of it on a wide body candle. That is signifying that the stock is looking to run. And so now the stock gaps up a little bit, starts trading up higher, and now it's coming back down into the gap range. Let's look at a 15-minute chart real quick just to kind of look at it. So here's your gap up, and then it just retraces intraday, slowing its momentum. Edward Life Science is definitely on the list there. And so let's go back to a daily chart. And let's look at the last one, was the company by the name of LB, and LB was a standard retracement down into the 20-day moving average, fairly similar to that of Southwest. If you look at its overall movement from its current support level, it had a 50% retracement, starting to go back up, hit resistance, intraday resistance there at 68.5, coming back down to 67.5, dropping it down to a intraday price level. Again, looking at the intraday movement. Okay, gaps up, closes the gap. Little concerned about that. If we can get back up above 60, this resistance level from yesterday, I think that's a potential as well. Overall, if I'm only looking for a couple trades here, I like the breakout on EW. EW's breakout over the high base shows me significant strength going up, even though retracements are a little more popular right now. I'd wait for another upward movement in price tomorrow before I made the trade. I like support at 50.5 on ADM. Going to wait till tomorrow for that upward movement in price to see if it holds, and I like Southwest. So I'm going to look at these, and given those, I think I'm going to make the Southwest trade today. I'm also going to make the EW trade today. Now, obviously, I am primarily an options trader, so I'm going to look at buying call options on those positions, determining where I'm going to target, determining where I'm going to place a stop loss. So let's quickly do that on those two trades. Southwest, once again, I will focus intraday. I might make the trade right now. I might make the trade later on in the day when I see some price movement up, but I'm going to enter in right around 33, somewhere around 33.25, 33.5 in that range. I'm going to target, let's go drop this down to a Fibonacci level, and this is going into Elliott wave. For those of you who understand Elliott wave, this is going into Elliott wave number 5 pattern. This is wave 1, wave 2, wave 3, wave 4. So I'm going to target what is called a slowing momentum target of 37.5. 37.25, 37.5. I'm going to put a stop loss underneath 31.5. So I'm going to carry about $2 of risk for $4 of return on that trade, and 2-to-1 reward to risk ratio in a bullish uptrend. I'll take that all day of the week. On EW here, I'm going to enter in once again on an upward movement in price. I'm going to target potential average yield, which is your standardized movements up. As you can see here, a standardized movement up goes from $90 up to $99. That's $9. And then it goes from 97.5 up to 105. That's about 97, about $8, so about $8.50. Current support is at 102. We are going to target 110. This is going to be a quick little 2-3 day trade, and so I'm only going to have about $3 of return. I'm going to put a stop loss right under the gap range just in case I'm wrong. I'm only going to take about $1 of risk on that. Targeting 110, putting a stop loss right underneath the intraday support levels. Both of them uptrends, both of them showing some strength, and place those trades. Looking at seeing if tomorrow ADM holds that support level at 50.5, and I will look at placing that trade as well. Hope you enjoyed the segment today, guys. Enjoy the website there at tackletrading.com. Check us out on the Clubhouse, and also, as always, check out the 5-star rated Trading Justice podcast. And if you have any questions for us, go ahead and hit us up on the website. Thanks, everybody. See you next time.
Get in the game. www.tackletrading.com